How are we all doing? Morning, morning, morning. God, it's a lot of people to say morning to this morning. This takes forever now. Morning, Peter, Jules. Evening and cold. Ooh, not good. New Zealand. Very nice. Morning, Thought. Morning, Diamond. Oh, you lot are chatting. That's why the chat looks busy. Morning, JC. Morning, Virginia. It's time. Harold, Steve, Freddie, Debo, Christian. Morning, Keith. So, just quickly look at everything banked and stuff to start with. Morning, Ruda, Fire, Amy, Jerry. Morgan Doug. I just got out of a New Zealand dollar Swiss long. So there. That was the H1. I can't see that's behind me, but H1 RSI extension and 5 mean reversion. Also closed out US dollar Swiss this morning. So been in that one for a few days, few weeks. Few weeks. I don't know how long. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 days, 2 weeks in a bit. So I didn't like I posted this in the Telegram group this morning. I didn't like this price action. So we had this massive rally through the entire New York session. Did not stop. All New York, basically. We pulled back down, pushed up. Then we put a bear candle in. Then we pushed up, put in a new high. And then as soon as we put that new high in, market pulled all the way back down. So I got out there because I didn't like the price action. It looked like it was going to drop short, which it is. But that doesn't mean it's going to come down. Obviously, we're just pulling back. But I had too much on the table. So I've banked 1.3% this morning. I had too much. It wasn't worth the risk of it coming back down again, especially after being in it for 2 weeks. Just wanted out, basically, and be done. There's a good chance I think we're going to come back up. This is kind of one massive propulsion gap, these 2 candles here. So the fact that we've tapped into the bottom of that propulsion move as well, which actually ended there, and we're seeing a bit of bearish price action, is just another little alarm bell that it may put another leg in, which is fine if it does. But there's absolutely no point in risking it. Bank it. Move on, get the next opportunity. So yesterday, banked 1.5 as well. Went through all the trades yesterday, I think. News today, we've got the IFO business climate at 9 for the euro. Doesn't tend to do much. Market probably won't hang around this morning and wait for anything. We've got consumer confidence this afternoon at 3 o'clock, which is half an hour after the market open. Normally not much of a reaction to that. So I don't think we're going to have much news movement at all today. So pretty bog standard business as usual today. Tomorrow it all kicks off. So CPI in the morning for the Australian dollar. So the inflation figures for the Aussie will move the Aussie and the New Zealand dramatically. So we'll probably wake up to ADRs tomorrow. FOMC at 7 o'clock tomorrow night, followed by the press conference at 7:30. So basically we've got big news event Australasia, dead silence, massive news event US. And then straight after that, tomorrow afternoon, we go into the euro, the US GDP and unemployment. And then into Japan on Friday. So busy week. Starts tomorrow though. So today, might be a bit up and down. We will see. Morning, Burke. Michael. I would like to know if the US dollar gains strength, why do the indices go down? Because the indices are priced in US dollars. And to be able to buy a stock in US dollars, you need to use your US dollars to buy the stock. Therefore, the M2 money supply in the US dollar drops. In the basicest form, that is basically it. You use your US dollars to buy your stocks. But there's a lot more that goes into it, obviously, but that's the simple explanation. You don't need to worry about it. You don't need to worry about the mechanics of it. All you need to know is a lot of the time they're inverse. Not always the case though. Morning, Stevie, Martin, Rudra, Healthy FX. Morning, John, Gordy. Pound CAD buy. Maybe. Have a look at that in a minute. What's the time? We've got 3 minutes to the open. I'm long already on pound CAD. So Got that on already. Aussie New Zealand ADR. I know, I'm in it. So the fact that I'm short and it's hit ADR means it's going up. A big strong push. Had an out on that this morning. That's annoying, isn't it? Look. Went all the way down. Well, that's a broker candle, so it didn't go all the way down there. But yeah, had an out on that one. Right. So there's one RSI ADR today, which is Aussie New Zealand. We'll look at that in a bit. Overnight news. Oh, we've got a lot to get through this morning. So overnight news, General Motors. Had the news on that. Haven't looked at this morning. Nothing. There's no news overnight. Earnings today kicks off. So we have pre-market today. We have 3M, General Electric, General Motors, Spotify, and Verizon. And then after the bell this evening, we've got Amazon, Google, Microsoft, Snap, and Visa. And then coupled with these ones, AT&T, ADP, Boeing, CME, Coke, and TMO. So all of these here and there will affect the New York Open tomorrow. All of these here will affect the New York Open and possibly the Globex session before the New York Open today. So just need to be aware of those. DAX today, it's had quite a rally actually at the Open. We're right up at these highs again, annoyingly. Oh, wrong one. So we've got this level here, which is from 2 days ago, which we're very close to. We're sitting right now on the previous yesterday's high. Right now, we're sitting on yesterday's high after having just literally spiked through it, and the sellers have just stepped in. And we've got last week's high coming up there as well. So upside resistance today, we've got 2 potential upside resistance levels. So if we break long, we're running straight into a brick wall, potentially, of limit orders. So if we do get a big push out and a rejection this morning, I'd flip short. Markets open. There's your pre-market range, which is very big. It's gone straight short. Look. Fast short today. Okay, so short on the Dow, DAX even. Let's see where we go. Downside risks today are basically the open from yesterday, which is down here. So basically that's the pre-market open, which put the low in yesterday. So we rallied straight away from that low all day yesterday. So there's your downside target. We've got a propulsion gap, which is already bought out of once already. So if we hit that, we may get a reaction. More likely we'll blow through it. So downside today, we're looking at yesterday's low and the previous day's low. And then we're dropping down to that low, which is in propulsion, but that's beyond ADR. So these 2 blue dotted lines to the downside are the previous days and yesterday's lows. So downside target, I'd look for support down there. So your pre-market opening range break today, if you took the 5, you've absolutely smashed it. So the 5-minute pre-market today, you're already 3R, approaching 4R. The 15-minute pre, you've got 1.5R. So whichever you took today, well done. That's too close to target. I should really hold that, but too much money. I want to bank £1,000. 047, 136. So we've got this accumulation break from yesterday, which we've tested twice, and the buyers seem to be adding back in here. If any, I should have taken that. We'll see. Get a little bit more on that. Morning, Mick. Morning, Celsius. Morning, Andres. Morning, Altro. Jacob. Dax getting close to all-time highs. Yeah. It's been up there for a while, though. So this was our previous high, which we've rejected. So the market's rejected that high already. So I get the feeling we're, I don't know, with the current climate, I just get the feeling we've got another leg down. I don't know, but we put a new low in. So we got a structure break there, look. That high, low, lower high, potentially. But we are also in an expanding wedge pattern, which is very difficult to trade because it means you get lots of volatility, which is what we would expect its earnings fortnight. So it could go absolutely anywhere. It'll go anywhere it wants to, basically. But I'm going to let it play out, but kind of should have taken, I think, 1.5 hours off today. This might be a mistake, but we'll see. Just don't like this propulsion gap fill. So have a quick look at what the other indices are up to. So NASDAQ's. So we're bearish on the Dow, we're bearish on the NASDAQ, S&P kind of neutral to bearish. So they are selling. It's not. I mean, it's not particularly strong, is it? But they are kind of selling across the board. So we may get a rally down. Oh. See where we go. Right. Placing some orders. Okay, let's have a look at FX. So ADRs today, the only one we've got is the Aussie New Zealand. So if we look at this, basically at the moment, we're kind of bearish, but we're also kind of rangy. It's more of a range-bound pair at the minute. But today, obviously, is the last chance you've got to get out of any Australian or New Zealand dollar pairs before it all hits the fan tomorrow. Yeah, so tomorrow morning, we've got the CPI figures for the Aussie at 2:30 a.m. UK. If they come out bullish, we'll get a rally in the Aussie and New Zealand. The Aussie New Zealand, however, will go up. If we get bearish figures, i.e. inflation comes down, that will take inflationary pressure off of the Australian and the New Zealand and release interest rate pressures, which will drive the Aussie down. So tomorrow morning, one of those two things is going to happen. We don't know which. So if you've got Aussie and New Zealand exposure on, you just want to obviously keep an eye. So at the moment, I've got Aussie short and I've got New Zealand long, basically. One of those trades is Aussie New Zealand. So whatever happens to this, There's nothing I can do about it. I'd rather not get into another squeeze on the Aussie New Zealand because it was a pain in the backside last time, but we'll see. I've got New Zealand dollar, Canadian dollar long as well. So I think that's got a good chance because I think we're going to get a pullback on oil at some point soon, which will weaken the CAD. So that's got half a chance. But if we get bullish news on the Aussie tomorrow morning, the New Zealand dollar CAD's going to go into profit. Aussie New Zealand's going to go into drawdown. So it'll be a case of scaling out of one. So if you've got any profit on any Aussie New Zealand overnight or any time today, it's probably worth just sticking it in the bank ahead of the news. But that's the only ADR we've got today. So that one obviously is an ADR hit to the upside, but I would probably not. Up to you if you want to take it. I mean, there's a good chance it will just do that today because we're not going anywhere ahead of the news. They're not going to really want to pile a load of money in unless they've got a hint as to what they think the figure's going to be, but it's unlikely they're going to want to drive it like 150, 200 ADR the day before the CPI figure comes out. So possibly a good reversal there. Just look for sort of half an ADR, third of an ADR to the downside. If I get back down to here today, I'll be out of this one ahead of the news tomorrow. That's going to be quite tricky, I think, to get back down there today, but we'll see. So that's your only ADR hit so far today. All we've got on the RSIs are the EuroCAD. So I'm just watching the DAX. We just put a new low in on the DAX. I'm just watching for signs of rejection down here. Got 30 seconds left on this candle. That's $500 basically, but that's $1,400. So I'm just looking at it going, is it worth risking $1,400 for the possibility of making $500 if that low is going to hold? Got this area here which we drove away from, which we're tapping into now. Then I'm going to take that 1,500. Obviously, I've still got a second position on break even. So second position will go for a runner, but it's 1,500 banked on the morning, so there's no point in risking. If it hits that, I could have made $500 more. But if it does that and then mucks about here all day, I'm not going to make hardly anything, am I? So it just doesn't make sense to hold for the sake of getting to that level when we've got these lows, which this is potentially what they're buying up. That's what they bought last time. Yeah, that's what that propulsion move was, that accumulation break. They bought this level. So we're tapping into it. We've rejected it once. We've tapped into it, tried to make a new low, got pushed back. We go green now. People are going to see that as rejection and buy it, potentially. So that's done. I can relax on that. Though I have still got a Dow short on, which I'm trying to get double bubble out of. EuroCAD extended on the RSI on the 4 hour. So this is in pullback at the moment on this move up. So potentially that is our move. Euro, we've got the rates on Thursday. So we're waiting for those to come up to see if we get some kind of bullish move on the Euro. Lagarde's obviously doing the press conference on Thursday afternoon as well. We've had a big, strong push down on this one. So we're extended on the 4 hour. Yeah, so down here, yeah, just looking for that move back up. So this is one of two things. This is either a bull move, pull back up to those highs, or it's a bearish reversal, which we're going to pull back down into these lows. So pushing up into there basically is what I'm looking for. The 2 positions on at the moment. This is an H1 entry from last week. From there, second entry taken yesterday on this push down into this propulsion gap. So far today, all we've done is accumulate sideways. So we've got this low coming up here. We've got this high coming up here. So that's a really good resistance, which turned into support. And we got this accumulation break to the upside, which they then did another accumulation break to the upside. So this is where they started that breakout and they continued that move long. So we should find some buyers somewhere around this area within ADR today, hopefully. So if it does push down into ADR today, back into these highs, then obviously I'll jump into a third and we'll wait until we get back up into that propulsion gap to get out. But actually, I might just adjust my TPs on that now. So I go for the middle of the propulsion. What's that? 380. It's about 0.4% profit, 0.5% move. Obviously, there's a lot more potential on this, but that is just over an ADR. So if we get an ADR hit to the upside today, I'll take it. If not, obviously, you can go for the run to the highs if you think that is a bull move rather than a bear move. We don't know, do we? Lovely M pattern reversal on that one. Reversal there. So that was extended. Euro US dollar also extended on the 4-hour. Got 2 longs on this one as well. So pretty much the same trade. This is looking very nice. And this is where we are tapping into. So that is potentially the previous resistance we shall use as support. We've got another area of resistance coming up there. We've got a big accumulation to get through. So if this does drop down, we've got another potential bounce point. We've got a sticking point there as well. And that thing will be absolutely exhausted if it does continue to drop from here. And then we'll be ready for a big snapback. So 2 positions on that one. I got out of the short positions on that one yesterday, as you can see. So there's the exit on the short. So the initial short was taken there. We got into that little bit of a squeeze with the US dollar weakness. Exited at the top of that propulsion gap yesterday. Obviously flipped long because RSI extended to the downside. So looking for the push back up into here. I haven't put any TPs on these, just realized. So go for that propulsion there. So that propulsion gap basically somewhere around there as a target to the upside, which gives me that much profit. So that's nicely extended on the 4-hour as well. Then we're looking for that push back up. So this one, obviously, we've got like news coming out of our backsides on this over the next 2 days. So tomorrow, obviously, we've got FOMC. This is quite a critical FOMC because we are so close to terminal rate on this US dollar. We keep being promised the terminal rate. 5.75 was kind of the very, very, very max the Fed were looking at. So the fact that we're now going up to 5.5 tomorrow evening, the Fed may come out in the press conference and say, we think this is enough. If that's the case, we're going to start that decline. If they don't come out and say that and leave us all hanging, the market's going to anticipate a 0.25% rise. Whether or not the market reacts positively to that or not, on whether they think it's worth trying to pile into any more or not, we're waiting to see. Bear in mind that is going to be next month, that 5.75. So we're only 4 weeks away from potentially terminal rate on the US dollar. So it could well be the turning point in the US. Then we've got obviously the euro rate coming out Thursday morning and Lagarde in the press conference on Thursday afternoon, then Lagarde half an hour later in the press conference. So when you look at euro US dollar on Wednesday, this thing could go like that. We've no idea. It could absolutely fly. If we get bullish move on the US dollar, sorry, on the euro, negative move on the US dollar in FOMC, this is going to push. If then we get bullish move on the euro, this thing's going to be out there. We're going to be 300 ADR out the highs, aren't we? If we get the opposite, and we get a bullish move on the US dollar, this thing's going to, bullish move on the US dollar, euro. US dollar bullish, down. Brain's not with it this morning. If we get a bullish move on the US dollar, we're going to be flying down there. If we then get a negative move on the euro, we're going to be down here on Thursday morning. Yeah, so if we get one way and one the other way, we're literally just going to do that. And the market's not going to have any clue which way we're going. So it's very tricky trading the euro US dollar ahead of the news. But I've got longs on. So if the longs work, brilliant. If I get out of this by Wednesday, fantastic. I'd rather be flat for FOMC than have risk on. But if I'm not out of this and we've pushed down here or we're sitting somewhere around here, I will move these TPs all the way up to the highs there. Because if we do get a positive result on euro US dollar, I'm going to milk it because it's going to go 200 ADR plus. So you adjust your TPs when there's news coming up for the volatility. So you make sure you milk that volatility if it goes your way. If it doesn't go my way, then I'll be scaling in down here, waiting for them to do that pullback. That move is going to need a profit take off of it. Yeah, the bigger that move is, the bigger that profit take is going to be and the faster it's going to happen. So that's euro US dollar. I'm long obviously at the moment on that one. But yeah, it might be out of it today. We'll see. I'm not anticipating a huge amount of movement today though. Because as you can see, the RSIs are flat because it's a big news week. DAX has pulled back. So as I kind of feared, we might be pulling back off of the lows. So we've got, this is obviously very big opening cash balance today, and they continued short on it. So the initial orders are in now. So it's whether or not we're going to start a speculative move. If we're going to start a speculative move and they want to go short, all we're going to do is pull back into that propulsion and drop. If they're not going to today, we may well just rotate, in which case then just get flat. I'll get flat in the second half and we'll sit there. It may obviously rally to the upside. You never know what's going to happen, but doesn't look like it's got an awful lot of power at the moment. The DAX kind of run out of steam a little bit, haven't we? So last 15 minutes, we're completely sideways. So thanks for the follow, Funny. Sorry, I've got my volume down. Didn't hear that come through then. Just about heard it. IBI Funny. IBI Funny too. That was funny, by the way. So, yeah, it's dropping across the board at the moment, the indices, but no great strength this morning. Oil. We broke out yesterday. So we were waiting for this breakout of the range to be confirmed. And it now looks like we are. So off up to 83.5 a barrel. Trying to get into this is going to be very tricky. So yesterday, it did it as well. So remember I said yesterday, wait for a pullback into that high to get in long. Why don't I listen to myself? So today, wait for a pullback. If we get a double bottom, be a beautiful long. But as you can see, absolutely no movement at all on the oil this morning. So we're looking basically for pullback long plays on oil. So reversal alerts to the upside. So if you drop down to M5, M15, and just wait for the reversal alerts to kick in, and obviously just take the longs, don't take the shorts. You can take the shorts if you want to. Obviously, you're going against the trend, but look for propulsion areas basically where we might find some buyers. Look for reverse alerts out of those and just go basically for looking for longs. The danger we've got at the moment is we didn't really get, it's very, very orderly, this move up on oil, but we didn't get many pullbacks. That was the deepest pullback we had on oil. Yeah, and that wasn't even a 38 retracement. So we haven't had any real profit taking on this, but then it is oil. It's a speculative move. So I don't know necessarily whether we do need a pullback on it. But I'd be watching for decent 38 to 50% retracements on this leg here to build up some power to drive it north. So if you want to and you fancy it and you're brave, you can take a breakout and assume that we're just going to rally today. But take one there and add there maybe. But I'd be much more interested in buying it when it's pulling back. So tricky to get into oil. I've struggled with oil getting in. But that looks like the target, isn't it? 83 a barrel, 83.30 roughly, somewhere around there is our upside. 83.50, call it. Rest of the indices kind of dead today. Not really going anywhere. Smile, good morning. Ralban from Uganda. Good morning. Outro, you're trading the Dow in the morning session. Sorry, don't know why that sent half in caps. Yeah, basically, I'm just... I've identified basically that the Dow, if you look at the Dow and the DAX, so the Dow during the Globex session tends to get a kick in the same direction as the DAX. The Dow and the DAX tend to move together. These two move together. These two kind of do the similar thing. Because it's earnings fortnight, the only reason I'm trading at the moment on the Dow in the morning, which I would never normally do, is because it's earnings fortnight. So what you've got to remember is we've got pre-market earnings coming out before the New York Open every single day during earnings fortnight. And then we've got all of the aftermarket action that will also be traded during the Globex session before the market open. So there's a lot of additional volatility in the US indices during the Globex session at the moment. So what I've identified is obviously we're getting, there's the open of Frankfurt. Sorry, that's the open of New York. If you look at the open of Frankfurt on the Dow, which is here, there. See that? So that's obviously the Frankfurt Open, where we take the opening range breakout on the DAX. That is the Frankfurt Open on the Dow. Yeah. So we're getting that additional move happening on in Globex that we don't normally get. So I'm trying to take advantage of that using exactly the same ORB strategy. So if the DAX goes for a runner, you'll find the Dow will probably go for a runner too. This runner, you know, the move will be much, much smaller. So what I'm doing is I'm doubling my contract sizes in the futures market during the Globex session to try and get a small move, which is quite stable, as you can see, and less volatile, but with double the contracts to try and get a decent sized trade out of it. And it's working pretty well. So it's exactly the same thing, taking the opening range break. If that fails, flip. Obviously, if we get rotation in the DAX, we will get rotation here as well. But because the Globex session is so tight, the actual loss you get with a double-ended stop out isn't that bad. So, you know, it doesn't go mental whippy. So, but so far it's working pretty well. I'm sitting on $620 in profit at the moment, short on the Dow this morning. So it's just something I'm kind of testing. Whether it's got a long-term edge or not, I don't know. It's something that's difficult to back test because I think it's only going to really be more prevalent during earnings season. I don't think I'd want to do this every single open. But if I can squeeze $1,000 out of futures in the Globex, then job done. SIBO, what is the meaning of Globex? Globex is the Chicago Mercantile Exchange's electronic platform, which allows 24/7 stock trading. So Globex, there you go. It's the premier electronic trading system providing global connectivity to the broadest array of futures and options across all assets. The CME Group technology facilitates electronic trading, providing users across the globe with virtually 24-hour access to the global markets. So obviously the New York Stock Exchange opens at 9:30 US, 2:30 UK. That is when traders trade. So the volume at the open, which is why we trade the opening range breakout strategy, is vast. Yeah, but you can trade the stock market 24/7 on the what's called the Globex. It's the Globex system. It's just a stock system. It's a trading system, basically a framework, if you like. So it just allows you to trade stocks. So what happens is when you get earnings coming out, for example, we've got before the market opens, right? So sometime between the market closing last night in the US and the market opening today in the US at 9:30 a.m. US or 2:30 UK time, these guys are going to release their earnings. So what it allows the market to do is to trade these stocks before the bell rings. But there is much, much, much less volume. There's a lot less liquidity available. So if, for example, I'm a massive investment house and I want to buy tons of General Motors stock, there won't be much available on the Globex market, but I can buy what's there. Yeah. But because there's very light liquidity, very light volume available, when I buy all of this stock, you get a fairly decent move. Because there's hardly any stock available, I have to pay more for it. So it's a way of them basically getting in ahead of the market open, if you like. And then when the market opens, it all goes nuts, obviously. So what you find is this is what is commonly known as the Globex session. So it's from midnight until 9:30 a.m. US time. This is electronic trading in the stock market. Yeah. So you look where the volume picked up there at the Frankfurt Open. So the reason the volume picked up there is because the guys that are trading in Frankfurt now and now in London are purchasing sectors of stocks. So they'll be buying the motor sector, the aerospace sector, the pharmaceutical sector, the IT, whatever. Yeah. And because those stocks exist in all indexes across the world, if I buy the motor sector or sell the motor sector, any of these stock markets that have got motor sectors in, those will drop as well because I'll be selling the entire sector. So when a bank instigates a stock sector sell in their portfolio, they will have multiple stocks in the motor sector. When they sell the motor sector, they sell all of those stocks at the same time. So this is why all the markets move in tandem. Yeah. So to facilitate these guys trading on US stock markets, CME invented the Globex system. So you can buy and sell stocks. But because these guys are all asleep in the US, there's very little liquidity available in the market. But you do get good moves sometimes. And especially during earnings, because there's more activity. Yeah. So that's what it is. But you'll hear, if you go into Discord groups or Telegram groups for futures traders, you'll hear them talk about Globex a lot. And the 90% of the comments you'll hear will be, I don't trade the Globex session because I always get killed. And the reason they get killed is because they're trying to get long or short orders on something going sideways. Yeah, so very few futures traders trade Globex. But at the open of the Frankfurt session and London session during earnings season, you get that little bit more movement. So it's worth a shot. But you've got to go in with higher contract sizing, much higher contract sizing, which is dangerous because if it does have a big spike the opposite way, you get hurt. Does the lack of liquidity not cause slippage? No. You don't get spreads. It's one tick spread. You'll only ever get a one tick spread on the ladder in Globex. And then all sessions, you only get 1 tick spreads. Yeah. Yeah, so there is no spread, look. The bid and the ask. But look at the volume. Well, you can't see the volume in this one because I haven't got level 2 on this account. But you basically, you don't get slippage because it's so slow. There is no slippage. What slippage like in futures? Massive, fast, huge. Because of the speed of movement, there's a lot of slippage. But it's only one or two contracts. The problem with the futures market is the market makers in futures get preferential treatment at CME. So when I place an order in the market, I will get given a queue number. So I might be order number 175 in the queue, right? When I get to position 1 in the queue, if there are market makers who want to place orders at my price level, they will jump me. Yeah, they get preferential treatment at the exchange. So there's two trading routes into the exchange, market makers and general. Market makers get preferential treatment. So if they want to continuously pump orders into the market, I'll never get filled, even if I'm number 1 in the queue. That's when you get slipped. And that happens during volatile periods. Open. So there's nothing you can do about it. It's just part of doing business. Front running, they call it, exactly. It doesn't happen in CFDs because there's no centralized exchange. You're trading with your broker. These prices you're seeing here and these orders being entered are nothing to do with the Chicago Mercantile Exchange. This is a contract for difference, CFD. I'm trading with my broker a contract for the difference in price. That's what a CFD is. So this this is all made up, not real. $1,370 for breakfast. So on the Dow, if you were bothering to trade the Dow, you are approaching support. Not that you should be, because that's what I teach you not to do, but hey. So we're at support. Globex support, yeah. So you can see how yesterday we pulled into the lows at the close, pushed away. Globex pulled into the lows. The limit orders that started that triggered that move. We're now tapping straight into those again. So if those limit orders are still in the market, we're not going to get through this level. We're going to stop, which means I will close the order. If we break this level, obviously it's going to flush somewhere. So you'll find that this will either hold or it won't. So I'm just going to close half my contracts off. And I'm going to break even the other half. So that's 725 banked. And then I'll either flush or I won't. And if I flush, I'll probably make 2 or 3 grand. If I don't, I won't. Same as the DAX. Yeah. You know, we're sitting at limits here. There's going to be limits sitting here, ready to trigger, or orders, stop orders sitting there, ready to trigger. That's why we pull back from there, because there's orders sitting there. Same way as there's orders sitting there. Right, I've got nothing else to talk about on FX today because it's not moving. We've got no ADRs. RSIs are flat because, as you can see, everything's playing out. We're just waiting for news, really. So we're just sitting here waiting, basically, for tomorrow evening, really. I mean, tomorrow morning is going to be volatile on the Australasian pairs, but tomorrow day is not going to be volatile. So yeah, just waiting really for something to happen. So if you've got any pairs you want to look at, let me know. I always thought CME was first come, first served. Before it went electronic, yeah. Not now. You will always get filled at the price you want or a tick out, basically. So you'll always get filled at roughly you'll always get filled, basically. They won't move on until you're filled, but you won't get filled at the top of the queue. So basically what people used to do with the arbitrage and like taking advantage of spreads and stuff, they've knocked all that on the head. So you're always going to get kicked to the back of the queue. Gordy, I live in Chicago. You'll probably see a load of big fat men walking around going, smoking, whacking great cigars, looking really poor when they used to be really rich because they used to work at the CME. Go watch the video Flawed on YouTube. You'll probably recognize half those people. I got 2R out the DAX. Cool. Yeah, 2R out the DAX was easy today with the ORB. More than 2R. I would have had my 2R hit, I think, if I'd have stayed in. No, not quite. You see, look. That was my TP, look, 2R. But my stop's wider. I'm using a slightly wider stop. So 2R would have actually been somewhere around there if you'd taken it straight off the top of the high, but I didn't. But I'll still hit it, I reckon. I reckon we're going to flush this by the looks of things. The sellers are in control today. And if they can flush the Dow, even better. But we see, look, if you want any more convincing that this market is run electronically by algos off of price levels, there it is. Yeah, that stopped there, exactly there, because that's exactly where it stopped with the last drop, and that's exactly where they bought the order yesterday. So they bought it there. The algos were told to buy it again there if price retraced. The algos are told to buy it again there if price retraces. Until there's more sellers entering the market than there are algo buy limits in place, this will just keep bouncing off of this level. When it breaks, those algos will flip and run the other way. That's what they're programmed to do. And this is why the CME guys always make money. The other thing about the CME front runners, the guys that get ahead of the queue, is they pay lower commission as well, because they are paid to provide liquidity to the market, which is why they're called market makers. So they can pay less commissions as well. So not only do they get ahead of you in the queue, they pay less. That's the advantage of being a bank. You make money regardless, don't you? So there's your 15-minute opening range today. Absolutely vast, but your 15-minute opening range break, if you're taking that, is short. So if you're taking the longer-term break, longer-term play, you are short as well. There we go. So we're at the lows. US markets haven't managed to do it yet, but we'll see. Right. Can you take a look at New Zealand dollar yen? So we're kind of contracting at the minute, symmetrical triangle styley. We've come off yesterday's high, which is the previous day's high as well. Sorry, that's the previous day's high, which was the day before's high as well, which was that high there, which was that low there, which was that support resistance. Again, same thing. The reason it moves at support and resistance is because the banks and algos are running that price. Yeah. So again, we're running that price short. So at the moment down, but we're basically just sideways. So we're 1, 2, 3, 4, day 5 in the range. Yeah. News tomorrow, Aussie. Unlikely this is going to get a massive amount of movement, but we will see. But right now, there's no trade on it. It's just sideways. So last entry was there and there. Both longs. Had a short entry there, which I broke even on, which worked out beautifully, but I didn't trust it. I was waiting to see if we got another break on this yen weakness, but we didn't. So it's flat. Don't do anything. Wait. Aussie dollar, US dollar. So flat on Aussie US as well. That was the last entry, Aussie US. From there. We're sitting in propulsion at the moment. So this move that started out of this accumulation, this break, they've brought it back up again. Again, this one, if you're going to get into this, if you're not in this for any reason and you're going to get into it today, you're literally flipping a coin, because tomorrow morning when the CPI figures come out, this is either going to go that way or that way. Which way it goes and how long it goes for, you're not going to find out until it's gone. So I wouldn't take any trade I mean, I can't, there's no point if I say it, look, I mean, at the moment it's bang, it's just sideways. It's not going anywhere, is it? So there's no reason to go anywhere on it. But at the moment, you've got upside targets up into 150 ADR. You've got a downside target down into 125 ADR to fill that propulsion gap and that propulsion gap. So it's either going to do that or that. But if you get into this today, long, for example, target that high. If the Aussie dollar CPI comes out positive, you'll hit it. If you get up to here and you haven't quite hit your target and then the US dollar news comes out as negative from the Fed on Wednesday, you'll fly through it. I've no idea. It's all driven about news. And tomorrow you've got news on both of these guys. So if you get into this today, you're going to get a big move to the upside or the downside. So you're either going to go into a massive profit or you're going to go into a massive drawdown. If you go into a massive drawdown, obviously you just deal with it and wait. If you go into a massive profit, you take it. I have no idea which way it's going. It's all down to the news tomorrow. New Zealand dollar CAD, same thing really, Steve. The Canadian dollar moves with the US dollar. US dollar's got massive moves. So this is the same thing, isn't it? The Aussie dollar is going to move, the New Zealand dollar is going to move with the Aussie dollar. So that's either going to go up or down on the CPI figure. The Canadian dollar is going to move with the US dollar, which is also going to be tomorrow evening in FOMC. You've also got crude oil inventories tomorrow afternoon at 3:30, which is going to move the Canadian dollar. Too many variables, and it's sideways. Yeah, when the RSI is sitting in the middle, it means we're not going up, we're not going down. There's no relative strength in this particular cross. Therefore, there's no opportunity. You're flipping a coin. You might as well flip a coin. It's exactly the same chances, isn't it? But when we're up here, there's more chance of the pullback starting. When we're down here, there's more chance of the push starting, the rally starting. So, but at the moment, I am in a long based off of that RSI extension. So I'm hoping we get some Aussie dollar CPI news tomorrow, which is bullish. And that will get me out of this before FOMC. Sorry, New Zealand dollar Swiss. So I just said all that, and now you want another pair. New Zealand dollar Swiss. I'm out this morning. So I got out of that one this morning. That was the RSI extension on the hourly. Out. That was my target up in here. But it was 0.5%. And I'm trying to get as flat as I can on stuff before the news all kicks in. So anything I've got which is 0.5% or so, I'm just going to make it green. Yeah, just always, if I can, just try and get as flat as possible, get it over here before the news, because if the news takes it the wrong way, you're going into drawdown big and you're going to lose all the profit you've got. If it goes your way, fine, you've still banked it. You could have banked more, but you know, it's no point in guessing or gambling as to whether or not it's going to go up or down. If you've got realized profit available, realize it. So New Zealand dollar Swiss, I'm out this morning. Obviously with this one, it's going to be Aussie dollar related off the CPI. The euro is going to be on Thursday, so the Swiss franc will move with the euro on Thursday. So but I think we'll probably get up into these propulsion gaps to the upside. So maybe today we might retest that area and push, or we might just rally straight up into there, in which case then you've got that as a downside target. Franco, love your computer geek insights. Very intriguing. Computer geek insights? What are they? What computer geek have I done? What's the name of Lord video? What's the name of Lord video? Oh, Flawed. No, not Lord. Flawed. There's a video called Flawed. I'll put it up here. It's brilliant. It's about the Chicago Mercantile Exchange. It's, how long is it? 1 hour 20. But it's well worth a watch at some point. Just bookmark it and come back and watch it. It's basically, it's the documentary. It's about 10 years old, something. But it's basically, it documents the shift from open outcry pits to electronic trading, and how all these guys have either adapted or fallen by the wayside, basically. 90% of them fallen by the wayside because they don't understand computers, basically. And look at them. I mean, this is 10 years ago. The guy's got grey hair shouting in the pits. Ain't got a clue now. So it's really interesting, but it gives you a real insight into how there is absolutely no way to make money in this market by trying to predict the future. If somebody shouts something in your ear to the left of you and he's buying something, you will buy it because he's doing it. And it's the herd, it explains the herd mentality in the pits. And it's the herd mentality that we see here. Yeah. Everybody's now buying the Dow at this level. Why? Because that's where these guys were buying the Dow. So if they've bought the Dow there, they've bought the Dow there, they buy the Dow there, everyone will buy the Dow. And it's exactly the same as the pits, except it's moved now onto candlesticks. And this is why you have this. You won't hear anything on Tick Strike this morning, but you know, on Tick Strike, this is the version of the pits open outcry, and it's just a really interesting documentary. Well, it is to me anyway, but you might find it absolute rubbish. But it's just one of the main takeaways from that video is it doesn't matter. These guys tell their story of how they used to trade in the pits, and part of their story is I used to go in there with $5,000 in my pocket, and if I heard a load of people shouting buying a stock, I would buy that stock, and I would look up at the board and look at the prices, and as it went up I would then sell that stock. He had no clue. None of them had any clue when they walked into that pit in the morning what they wanted to buy, why they wanted to buy it, or which way they wanted to go. What they did was what everyone else did, and that's why it worked. So when you move to electronic trading, they're all sitting in front of a computer with a chart going, well, which way is it going? You know, they can't hear what's going on. That's how it used to work. Now it's all run by algos, and you need to understand how the algos work. If you don't understand how the algos work, you can't understand how the thing's going to move. This is why you buy at support and sell at resistance, because that's what the algos do. You do what they do. They just replace the guys that were shouting in the pits. Euro odd. I've looked at that, haven't I? Have I? Lost track of where I am now. Euro odd. No, I haven't looked at this. So bang sideways at the minute. Your guess is as good as mine, isn't it? Same thing. Australian dollar CPI tomorrow morning. Thursday. Euro interest rate announcement. We're in a range. So don't buy in the middle of a range. Buy at extremes. Downside target. Upside target. No idea. Not going anywhere. Morning, Michael. Pound US dollar looking like it wants to pull back further. Market structure's bullish, so you got a low, a high, higher low, a higher high, a higher low, higher high. But that will determine which way this goes on Wednesday evening. The pound is bullish. Yeah, we've got more interest rates coming on the pound. We know that. We're waiting basically for Bailey to come out and confirm his thoughts on what the interest rate's going to do based off of the CPI drop last week. We haven't heard anything from Bailey since the CPI drop, so I'm just basically waiting for Bailey to rally the market, which he's not doing at the moment. But this is a 24 bounce. Next leg up, and I'll be targeting up there. So if this is going to be a new leg up, I'll be out in that propulsion gap, just in case it's not a new leg up and it's a new leg down, in which case I'll still be out in that propulsion gap. Regardless of what happens, I want to be out in that propulsion gap. Franco, have to admit, position trading tactics have saved more than a few of my trades. They will. Because you've stopped putting an order in the market to say, lose me money. Therefore, you cannot lose money. You can, obviously, but not in the same way. You just lose it in a different way. We have different problems, don't we? position trading. We have a whole new set of problems we've managed to invent for ourselves. So I just all the US indices have stalled out at the moment. We're having a run at this low. Hopefully we can break that. But the DAX, which is what you should be trading, there's my TP. Yeah. So would have hit target. So, you know, I lost that much, but it did hit. But we're kind of, looks like we're running out of steam. It's going to be one of those slow, if we are going to break, it's going to be one of those, like 3 hours later, you'll be sitting at 2.5 hour instead of 2 hour type days. So just hold it short. If you've got it short still, I would. I am. We'll see where we go. Oil, I've looked at oil already, but oil looking for a break up to 85 a barrel, or 83.5, 85-ish. So looking for a pullback to go long. So today, I would be monitoring M15 or M5 and just wait for the market to pull. It's pulling back now. There you go. So we're starting to pull back. So watch these levels here. Wait for a reversal alert. Once we've tested these levels, wait for a reversal alert on M5 or M15. Yeah, M5 is going to trigger in a minute, so I'd probably wait until M15. A bit more of a pullback than that. And then look for longs at the minute. Just waiting for it to go up. We have got potential resistance coming up here. We looked at this area yesterday. So this was our gap play. So we remember you were in here, we shorted this. So that's where we gapped up, came back down, used it as support, pushed away, price discovery out of that level failed. We came back down, accumulated around that low, then we finally broke it back down into the gap. So that high there and all these lows are a price point that the market was not happy to transacting, which is here. This is where we pull back from. How far we pull back and whether you class that as one move or that as the first leg, this is the second leg, will determine whether or not we bounce here or we bounce from somewhere further down. So this is exactly where I'd love to buy it today, down in here. So it's just under an ADR move to the downside would be fantastic. But AZ, I asked about this before, but for clarity, if position trading becomes as big as smart money concepts, would it no longer work? Well, smart money concepts didn't work in the first place. How many people do you know that make money out of smart money concepts? I don't know anybody. People have reinvented it and called it different things, but I still don't know anybody that makes money using it. They say an indicator system being watched doesn't work. Who does? Right. Let me clarify this again. Right. In a $7 trillion a day market controlled by algorithmic trading in banks and institutions, do you think they're watching a YouTube channel with 83 people in it taking orders in the market without a stop loss? Seriously, wake up. We make less than 5% of this market. The entire world of retail traders make up less than 5% of this market. Do you think they're waiting for retail stops to be placed in the market before they hit them? And then they move the market away? Seriously. We don't. Well, if everybody in this room right now put £100,000 into an account and I said 3, 2, 1, sell, we all hit the sell button at once, that thing wouldn't even tick. Wouldn't even tick. The amount of money it makes to make that candle is millions and millions and millions of dollars. They are not watching us to get my $20 stop loss. Seriously. Nuts. Retail are wrong, right? The reason the market goes the opposite way to this chart on my website is not because the stop loss is in place, right? The market is not going to get the retail guys' stops. It's going to areas of liquidity where there are orders placed by banks and institutions. We all put our orders in the same places. The banks and institutions go there purely because they need to fill their orders, and they place their orders there too. The market moves up and down because the banks and institutions trade in the same way as we trade as position traders. They place orders in the market at levels that make logical sense to get in and out so they can exit with a profit on the next wave. And not hunting retail traders' stops. This smart money concept is just bollocks. The whole thing is bollocks. Always has been. The guy that invented SMC sells courses, for Christ's sake. What do you think he's doing? Making money out of selling courses? Yeah, everybody that's taken his concepts and changed them to something else is selling you a course. No one's making money in this industry unless they're selling you a course. Or they're sitting here doing this live like I do every day, and I have done for 4.5 years on YouTube, yeah? You want to find someone that makes money out of the market, make them prove it. Go and look at my live rooms. Go back as long as you want. You can scroll as long as you like. I can sit here for an hour and scroll, and you'll still be watching my live rooms drive past. This is how long I've been doing this in here every day. I don't use smart money concepts because if you put a stop loss in the market, you will make a loss. Yeah. But the whole premise of smart money concepts is flawed in the fact that they are telling you that banks are hunting your liquidity. They don't even know you exist. You're a piece of poo on the foot of a fly on the bottom of a shoe in a banker's room. You're that tiny, honestly. I have to quash it because I get asked it a lot. If you release an EA and start using an EA, it will stop working because the banks know about it. Banks don't even know you exist. Seriously. So what's your thoughts on the ICT guy? I think you just heard it. Go, if you want to make money in this industry, right, do what the banks do. Right, go and watch the Bloomberg channel. Yeah, don't listen to some bloke on YouTube. Don't listen to me. Go and watch Bloomberg. Listen to what the guys in Bloomberg say. Watch that video, Flawed, I just put up there. Listen to what those guys are saying, right? Listen to how many of them mention the word stop loss. Yeah. Listen again to how many of them use the words DCA or dollar cost averaging. Right? None of them will say stop loss. All of them will say DCA at some point. If you listen to Bloomberg for a week, you'll hear it 10 times. Why? Because that's what the banks and institutions do. They average in and out of moves in the market because the market goes up and down all the time and they have no way of predicting which way it's going. So what do? Get in and get out. Why do they get out? Because there's a green bit over there that means they make money. Why don't they get out? Because it's red and they're waiting for it to turn green. Yeah, you will never hear the word SMC or smart money concept mentioned on Bloomberg or in any bank or institution. And you will never hear in any bank or institution the words IPD or interbank price delivery algorithm. Doesn't exist. As far as my banking guys that I know in banks are aware, they've never heard of it. So unless it's some massive supercomputer sitting in the bottom of Barclays Bank that nobody knows about apart from the guy that's job is to plug it in, it doesn't exist. All made to sell courses. There you go. So that's my, if my strategy becomes as big as smart money concepts, it is. The banks have been doing it for 100 years. Anyway, I've said that before. I also love cost averaging. I was 6 positions in EuroCAD and got out flat this morning. No loss, protected your capital. Yeah, exactly. I was in 1, 2, 3, 4 on the EuroCAD. I also got out with a profit. After being wrong for 1, 2, 3, 4, 5, 6, 7, after being wrong for 10 days on every single trade I took short, I got out because I did what the banks do. I didn't use smart money. Look at the smart money concept traders. Let's go short because we just run the stops. Oh dear, I'm dead. Push up. Let's go short because they've just run the stops. Oh dear, I'm dead. Hey, they've just run the stops. Let's go short. Oh dear, I'm dead. So you've now lost, well, let's call that one as well. Oh dear, I'm dead. You've just lost 4% of your account, smart money concept trader. Who's the smart one? I got in and got out. Sorry, I got. You come into my YouTube channel and swear at me. Mr. Smith, Franco, what's that mean? You're talking in riddles today, Franco. Are you still on your drugs? I have entered long on the Dow with the herd. I wouldn't enter long though, right? Don't, hang on a minute. Oh, well, you can do, yeah, right. But, right, so now I've just said all of that about stops, right? If you're trading the indices, you do need to use a risk reward. You can't dollar cost average. We can dollar cost average into the indices, but that's not how it's done. These are run by this is a different thing. I'm talking about Forex for position trading. Yeah, go long here, tiny little stop. We're not risking fortunes here, yeah? So, but just because this has bounced, so let me clarify the difference between the reason this has bounced here. Because it's bounced here doesn't mean it's not going to go down, yeah? Because we are selling today, yeah? There's been nothing but selling so far in this market today. Same with the DAX. They've been selling the crap out of it. We've hit a level where there are limit orders triggering. So there is, let's say, for example, there is, I don't know, $50 million of orders sitting at this level to buy with the algos. So they bought 50 million there. As soon as the market moves up, they add another 50 million there in case it comes back down. Their purpose of this 50 million order is not to go long necessarily to hold it. It's to stop the sellers driving through to make them a loss. Gives them time to bounce the market. Then it will either go and they will make a load of money, or it won't go. But this gives them the opportunity to bounce the market and get their orders flat. Right? If there's more sellers here than that order, it will go down. This market works on buyers and sellers. Yeah. If there's more sell orders than there are buy orders, you will tick down. If there are more buy orders than sell orders, you will tick up. You can't see it here because this is, I haven't got level 2, level 2 data, but it's easily explained on the ladder. Yeah. So there's 3 orders to go long, 4 orders to go short. 3 orders, there you go. So you see it ticking up because there was 5 orders to go long there, and there was 2 orders to go short. Now there's 6 orders to go short and 1 order to go long. So this will probably tick down. Tick down? Yeah. Why? Because there were 6 people wanted to go short and 1 wanted to go long. Yeah. So in this guy comes in with 7 orders to push it up. It's going to push down. This is how the thing works. 2 people want to sell, 1 wants to buy. The 7 want to buy at that level. There's 5 want to sell at that level. Yeah. Somebody added more orders there, so we tick down. Now we're going to tick back up again. It's buyers and sellers battling it out. Each of these contracts is worth $5. Now, this is the Globex session, so we're not seeing depth of market and huge orders coming in here. But that's basically all it is. So when we hit this level, yeah, you will have seen what's called an iceberg order sitting here. If you have something like Jigsaw or Bootcamp software, you'll see the iceberg. But the iceberg order will basically be a level where there's a massive bulk of orders sitting. So if there's 10 million iceberg orders sitting there, right, and we hit this with 8 million, these will absorb all 8 million of those and we'll be left with 2, right? Unless someone comes along with 2 million shorts, this iceberg isn't moving. So what will happen is the guys that sold into this will have to get out of their orders and flip long. Called puking it is, they call it. And then we flip the other way. That is why support resistance works at that level, because that's where they bought it. That's where they added a load of orders. We hit that and there wasn't enough people selling to get through that level. If there is 15 million coming down at this level and there's only 10 million sit there, their iceberg will get smashed through and it will disappear the other way. Then everybody that's driven it short will stick their iceberg back at that level. And when we get back there, they will do exactly the same thing, support resistance. That is why support resistance exists, and that is why it works, because that's what's happening in the mechanics of the market. A very simple thing. It's literally numbers. You've got more numbers that way than you have that way. It goes that way. It's literally that simple. We try and overcomplicate it by putting concepts in place to explain things. But at the end of the day, it's buyers and sellers. It's the same as a fruit stand in a market. Yeah, the guy's got a load of fruit to sell. He goes and shouts, I want a pound for it, want a pound for it, want a pound for it. There's no one coming up to him as he goes, oh, I want 80p for it. And everyone, oh, well, I'd buy a load of that 80p. And he goes, oh, I want a pound, I want a pound, I want a pound. And they all run away again. So he drops it down to 80 and they come back. Everyone's bought those apples for 80p. Can now go and set up their own market stall and go, I want a pound for these, I want a pound for these. And eventually they'll sell them. They just made 20p for apple, banana, whatever. It's exactly the same concept in the stock exchange. Same thing. Remy, would you consider supply and demand smart money concepts? Supply and demand is support and resistance. Whether you draw, right, this is my support resistance indicator. Yeah, these black lines. Yeah, this is a supply and demand indicator. What is it? Resistance. Whether you draw it as a box, you draw it as a line, or you draw it whatever you like. It's an area on the chart that price moved away from because there was more sellers than there were buyers. When we get back to that level, somewhere between there and there, in here, somewhere around about, because we've no idea how many orders are sitting at what levels in here, it will possibly push away again. Yeah. It's just a level of price. It's the same thing. Supply and demand is the new support resistance. I was taught support resistance 15 years ago. Somebody came along and went, I know, instead of using a line, I'll make a box and I'll sell a course on it. And I'll call it supply and demand. All of a sudden now everyone's a supply and demand trader. Then they'll repackage that and make it something else. And they'll call it something else. And they'll sell you that again. But at the end of the day, it's an area where price has moved from. And that's what price does. The problem we have as traders is you can't tell if it's going to be that line, below that line, middle of that line, or above that line where price is going to change. So what happens is when it gets to there, you try and pick the top and you put an order in to say, lose me money if I'm wrong on the top. Invariably, you will be wrong on the top the vast majority of the time and you will lose a load of money. Whereas if you just placed an order there to go short, if somewhere around there the banks came in and did the same as they did before and it pushed away, you'd make money. But if you put an order in to tell the market to take it away from you, you will get it taken away. Whether you use support, resistance, my indicator, supply and demand, the one that draws the box, or whether you just wait until it gets up to there and hit the button and guess. It's the same thing. It's not going to go above that high by 10 pips to take retail traders' liquidity. It's going to go above that order and go down because there's more people wanting to sell it at that level. Banks aren't going there. They go to find liquidity and they know liquidity's there. But it's not enough liquidity for them to go, oh, let's head there and make sure we can fill our orders. They're going up and down to make money. That's what they do. But they will, you know, the market does need liquidity. So the smart money concept has got a basis in the fact that we know that there are orders there. There are bank breakout orders there. There are bank sell limits there. There's liquidity there. That's why the market moves from support to resistance, because it knows there's liquidity. So if you've got to fill an order and you haven't got enough money in the market to fill your order at this level, your market makers will take it to a level there's liquidity. And this is, but the way it's taught is like, if you put a stop loss in there, they come and steal your stops. They're not stealing your stops. They're just finding orders in the market. That's all it is. Everybody's laughing now. Would you consider supply and demand? I've already done that one. I don't know what it is. It's just support and resistance. Franco, I watch Bloomberg a lot. This is true. Yeah, you'll hear it. You'll hear them say DCA. You'll hear them. You'll hear the, especially the pension funds. They'll use the terminology DCA all the time because that's what they do. They got up to 40% in drawdown on their portfolios by DCAing because that's their job, is to take that portfolio of money and return a profit on it. You can't predict the future. They can't predict the future. They get an idea, which is what the scorecarding system is all about. We know roughly which way it's going to go at some point, but they can't predict a turning point in the market any more than you or I can. So they DCA into their positions to get out, which is position trading, basically, on a much bigger scale. You know, we can't do anything that the banks can do because we haven't got the money to do it. If a bank wants to move this EuroCAD down today to 100 ADR, it will do. And it can do. If Barclays say, I want EuroCAD this afternoon down at 100 ADR, they have the power to do it because they can just go sell a load of euro and convert it into Canadian dollars. And when they get down there, they can go, right, buy all those Canadian dollars back and push it back up again. Because they can, because they've got billions and trillions of dollars worth of money they can pump in and out of the market as they see fit. And every time they do that, the candles move. We can't. So the only thing you can do is ride on their coattails, and they leave footprints in the form of these orders. So you follow their footprints, you know where they're going. I don't know where they're going. I know the locations they're heading, but I don't know which one of them they're going to choose, and I don't know when they're going to make the move. But I can see where they will be going. So if they come down to here, they will then come back up to here. If they go up to here first, they will then go down to there. That I know is going to happen. Market structure. But I don't know which. So if you don't know which, how could you possibly use an order to place in the market to lose you money if you're wrong? Your odds are 50-50. How many of your trades are you going to lose? At least 50 of them, aren't you? Because you can't predict the future. So stop trying to predict the future. Remove that. Do that. If that's wrong, wait until it is right. It will be right, and guarantee it. You can see it was right. I thought that was happening. I was wrong. So I just waited for them to do that. And then I was right. Did I have any clue at that point whether this was going up or down? How could I? The banks don't even know. And that's what the EA does. The EA, literally the EA's job is just basically to get me in on a condition and hope. And watch that video, Flawed. That's what those guys every day in the Chicago Mercantile Exchange were walking in. They were going in and they were hoping when they went buy, it went up. They have no idea. They hope. That's all you can do is you can hope. But if you put an order in the market which turns your hope into a financial loss, you will get a financial loss on half of your trades. I'm short at the moment on the Dow Jones. The Dow Jones is going up. I hope it goes down. My stop loss is about to get hit. I hope it doesn't invalidate that high. But I have no idea what's going to happen next. Calculated risk. Can we see how many activations we have left on your indicators? Yeah, if you go to the indicator page on MQL5, it shows you how many activations you've got. Would you put on new risk ahead of news this week? If there's a setup, yeah. So I use obviously the market reversal alerts EA. It basically, all it does is wait for an H1 RSI extension and gets me on the 5-minute reversal alert. That's it. So if there is that condition met this week before the news, I will be into a new trade. But I will be watching the portfolio, and if I've got something in profit, I'll be breaking even on it. So for example, this one, if this is sitting here, yeah, there's my break even. So if this is sitting here tomorrow afternoon, I'll break even the trade and move those TPs up because it's either going to pump or it's going to dump. I don't know which it will do, but if it pumps, I'll make a fortune. If it dumps, I won't make any loss. There's nothing wrong with getting into trades, but I think you'll struggle at the moment because there's nothing getting extended because it's the news week. So, but yeah, take new trades. And if this is the beauty of the strategy, isn't it? This is the whole beauty of the strategy. If you get a US dollar Swiss signal, you know, let's say this pumps up to ADR today and hits this propulsion gap, right? And we get an H1 RSI extension. There's nothing wrong with getting in short there because it's extended to the upside. So worst case scenario, it then gets positive news on the US dollar and pumps up. We still get into a couple more. If they've done that, what have they got to do next? That, because they need to make money. Out flat on the Dow, $765. So yeah, doesn't matter, does it? Goes up and down. If it goes up on the news, it will come down at some point. But it might turn into a squeeze depending on if there's a fundamental shift. If you want to be safe, don't get into any trades. But if you want to be safe, go and work at McDonald's. To be blunt, that's the reality, isn't it? If you're risk averse as a human being, this is not your job, is it? Yeah, our job is to put our money on the line. So if it's, I get asked that by my financial advisor. He sends me a survey every year, like this 10-page document which asks you loads of questions about yourself. And one of the questions is, would you describe yourself as a risk taker or not? And on a scale of 1 to 10, what would you put yourself as? Risk taker, 10. If you're answering not risk taker 1, this isn't your job, because my financial advisor will put my money into a very low return, very low risk investment portfolio. If I answer that question that way, if I answer it the other way, he will put me into a high risk, low diversification, high return portfolio. So that's like trading before the news or not trading before the news. Yeah, news moves the market. As traders, the only way we can make money is if the market moves. So you've got to have that volatility to make that money. But there's obviously ways of getting in safely and ways of getting in with 2% risk with a tiny little stop loss ahead of the news. That's nuts. That's what news trading is. And all those courses you buy on news trading teach you to try and get in on a break of the news. So take that area and wait for the news and take that break. Oh, sorry, did you stop out 4 times and lose half of your account? Yeah, okay. Then it goes. Yeah, that's news trading. We don't do that. Baggy, have you thought of doing a dashboard which highlights when price gets close to resistance and support levels? No. You don't need one. What would you use it for, Baggy? Let me ask you the question. What if you had a dashboard that showed you when price is getting close to support and resistance? What would you use it for? Yeah. Every time it got to that level, let's say that was the trigger where the alert went off, what would you do? If the answer is, which I suspect it probably is, wait for it to get to that level and then go short, why not just place a limit order there? You can do that every morning and then just shut your charts and come back in the afternoon and see how it's worked. You don't need a dashboard to do that. Just place limit orders on the market. And a lot of people do that. A lot of people work that way. Yeah, so I'll be sitting there going, buy limit there. Yeah, if it comes back down to there, I want to buy it. If it gets up to there, sell limit. Right now, I'm not interested because I've no idea if it's going up or down. But if it gets there, I'll sell it. If it gets there, I'll buy it. You don't need a dashboard. But when price reacts at those levels, so let's say it gets there. I mean, 90% of the time, it will react at that level. Virtually all the time, you will get a reaction at support and resistance because there's limit orders there. So if price pushes up into this now, right, and then an hourly candle does that, you're going to get in short. It's then going to do that because that candle is just a reaction to that level and it's the limit orders triggering. When that candle closes, it doesn't mean anything more than there's a 50% chance of it going up or down from that point. So just place a limit order at support and resistance and then deal with it afterwards. So if that doesn't work, place a limit order up there. Because if it blows through that one, that's the next one it's going to do. If it comes back 50% on that, you get out. You don't need a dashboard. Support resistance is easy to trade. Waiting for a reversal alert, yes, that is making more sense, because obviously when we get the reversal alert, we know that the sellers are on board. So this is telling us, this is telling us basically that the buyers and the sellers have switched sides. We want to get on board with the guys that are going our way. But you don't need a dash to tell you that. Literally, it's as simple as, you can use this indicator, obviously the support resistance propulsion, it draws it in for you. Yeah. So literally wake up in the morning, look at it and go, scan through. Are we at levels of support and resistance? If you are, take a trade. If you're not, don't. There's loads out there anyway. You'll go Google, you'll probably find one if you want to, but it won't impress. It won't. The best thing you can do is just go and buy the market reversal alerts EA, stick it on your chart, and wait for the RSI extensions and get in. Yeah, this is what I do every single day. That's all I do. It's all you need to do. You don't even need to do it. I don't do any of this. The EA does it all, doesn't it? So don't try and overcomplicate something very, very simple. Is the broker shown on stream usually RoboForex? Yeah. I'm having problems getting good results with the ORB EA in my demo accounts and want to replicate the live rooms. Oh no, yeah. Demo accounts, you would normally get much better execution than live. Depending on whether you're an A book or a B book with your broker, that's the difference. If you're an A book, well, depends which you class as A book and B book. But if you're, I should suspect the DAX is pushing. Yeah, so I've stopped out break even on the second half of the DAX. So if you're A book or B book with your broker, meaning they either take the other side of your trade or they don't. If they are taking the other side of your trade, you'll get faster execution than if they're farming your order out, the dark pools. So if you get an ECN account, you'll usually find you get fast execution. Rami, since I'm a 1-year-old trader, how are you managing to type so well if you're only 1 year old? All I can see is the terms being used now. So what I saw is supply and demand, and FVG is the basis of a lot of new teachings and liquidity concepts. I found these teachings with some martingale strategies for positioning much better than retail break and retest trading. One thing you'll learn is it doesn't matter what you do. Yeah, the indicators that I've developed and that I use have the same odds as every indicator under the sun and every trader under the sun that doesn't use any indicators. Yeah, when that reversal alert triggers, it will either invalidate and push higher, or it will go that way. What makes a profitable trader is identifying where the market is going and taking the money when it gets there. What you're taught, and I guess smart money concepts teachings will teach you the same thing, is to use risk reward. And that works well in high momentum breakout strategies like the ORB strategy, the ORB EA, which is why I quote risk reward every day in here. This works fantastically well with a risk reward based stop strategy. Yeah, it's the only thing I would do with a stop loss. All other teachings will teach you to get in, use a stop loss, and use a reward multiplier based on the distance of your stop loss. The problem with that is this distance and this distance are fine from a risk reward perspective. However, can that distance be achieved by the market? If that is 250 ADR because of the size of your stop loss, you're never getting there. Which is why you have to understand ADR, because the market moves a set, all markets have their own ADR and they move their own set distance every day. If your target is 3 times the average daily range of a pair, it's going to take weeks to get there if you're lucky. And on its way, it's going to do that, which is going to scare you out and you're going to get out of your trades. So it's everything you do, whether you use supply and demand, support, resistance, my indicator, moving averages, Bollinger Bands, RSIs, MACDs, CCIs, you name it, whatever it is, the odds are the same. It's 50-50. When you enter that trade, it will go up or down. How you deal with that trade after you enter it is what makes you money. Identifying when to get in the market has a 50-50 chance. When I get in with the RSI extension here, my odds are 50-50. Totally wrong. But I was right. Why was I right? Because I got out when I had a profit, because I allowed the market to breathe. Every SMC strategy, and this is why I say, think about the name, smart money. How is it intelligent and smart to place an order in the market that guarantees you a loss, right? That's the problem with education in retail Forex. And most of it stems from brokers. Most of these people that sell courses and teach have an affiliation with a broker. I do. With RoboForex, I've got an affiliate program with them. Not because I push them. You don't hear me in here going, hey, we're sponsored by RoboForex. I only use these. I don't. I use multiple brokers. And I don't think RoboForex is the best. I think DARWIN is way better. Execution, everything is just better. I use RoboForex because they're okay at the moment, but that will change. Where they go crap, I'll move again. I always do. But it's all geared up to make money. And when you're using a stop in the market and you've got a level that you place an order at to lose, it's all about that multiplier. But the problem is the market moves up and down all the time. Yeah, all of this. Someone in here on this day was murdered. They went long with a stop. It flipped short. They stopped out. So they went short with a stop. It went long. They flipped. It stopped. So they just got stopped out 3 times in that day. That made them cross. It made them angry. It made them a revenge trade. Then they went long that day and got stopped out again with twice as much as they lost the day before. That's 5% of their account in 2 days. That's bloody hard work getting that back. Remove all of those stops. And what's that guy done? Entered the market and waited for a day. Did he make money? No. We'll wait till tomorrow. Yeah, there's nothing smart about putting an order in the market that's going to lose you money. And there's nothing smart about a concept or a strategy. That doesn't make you money. What makes you money is the ability to wait for the market to come back into favorable conditions. That there is no strategy on the planet that is going to work for you, and any more accurately or less accurately than anything else. My strategies don't work. Yeah, look at the trades. Look at that. It's an awful short, but nice profit. Sometimes it works beautifully. Look, there's a lovely long, in, out, lovely long, in, out, long. Got out of break even, but could have made money. Worst short in the world. Still made money because I'm not using orders to make me lose money. That's the big difference, isn't it? And this is what the Market Reversal Alerts EA is doing. It's waiting for conditions we see replicate. And that's all a system or strategy is. Every system and every strategy you see out there works sometimes. The reason you don't make money with any of them is because you place an order to lose you money when they don't work. So you're guaranteed a loss. When they do work, you can't hold it to the level that makes it profitable. So you're guaranteed a small win, never bigger than that. If you can hold it to the risk reward ratio, which is why mean reversion traders that use a stop loss are the most successful on the planet, because they're only targeting 1.5 R. You can hold it for 1.5 R, but as soon as it gets to 2 R and 3 R, you're papping yourself every time a candle goes the wrong way and you shut it. Yeah? It's risk and reward that makes you money. It's whether or not you make more than you lose. So I scale out of my positions and take small losses waiting for the reward. That way I'm not taking big losses, and that's why it works. Yeah, it's just a different thing. So everything you look at, if you've only been trading for a year, you're going to find it's all going to teach you the same thing. The things it's going to teach you are you wait for X to happen. Then you wait for confirmation with Y. And then you wait for a signal to give you Z. Which 3 indicators they are is irrelevant. when you press the button on Z, the odds are 50-50. Yeah. Replace that with MACD, CCI, RSI, stochastic. Replace that with support resistance level, supply demand zone, or moon cycle, or day of the week. Replace that with market reverse alert indicator, bullish engulfing, bearish engulfing, hammer, shooting star. The outcome is still the same. The system or the strategy has that odds. And this is what traders know. When you press the button, there's absolutely no idea of a long or a short working or not. Absolutely beautiful. Bounce. Who didn't get in on that trade? Smart money concept traders. Why? Because it didn't take the stops. Smart? Who got in on that trade? Me. Why? Because I've seen this condition happen for the last 25 years in the market, or 100 years, or however long you want to go back on an RSI. Every time it gets up there, they profit take it. Who got in on that? I did. Did I wait for it to go up to there because it's smart? No. Did I wait for it to hit the monthly support resistance level? No. I got in because I was in on that. Is that the right indicator to use? I don't know. I got in. That's it. I have no idea whether it's going to work or not every time you get in. But what I don't do is give the market my money every time I'm wrong. That's what you will learn. It doesn't matter how many courses you take, how many indicators you buy, they will all give you the same outcome. They also waited for the elbow from the order filler at Goldman. The life, oh, I'm way behind on the chat now, obviously, John. The Liffey floor, was that life floor or Liffey floor? Was rife for that. Insider trading at its most blatant. Yeah. This is what I mean. This is all the banks and institutions. Right? Again, you know, you look at the CME traders on the floor and the exchanges and the old days shouting and screaming at each other and giving them the nudge and the nudge and the wink and all this sort of stuff. It happens today in the banks, except they now use Telegram. They talk to each other on Telegram. Goldman Sachs has just been, I think it's Goldman's, one of them has just been massively fined because it found its traders in interbank were talking to each other about orders being placed, so they knew they could find the liquidity to make money. Guaranteed both of them going to make money. I'll go 50 mil long, you go 50 mil short. As soon as you've done that, I'll go 50 mil short, you go 50 mil long. We'll take the spread. Yeah, they get fined $250 million. So what? They made 500 million. Yeah, you can have that 250. We'll have that 250. Let's go and buy a Ferrari. It's the same thing. Yeah. There's always ways of making money in it, but the up and the down is always the same. Price goes up, price goes down, moves through time. Those are the three constants. Those are if you learn one thing, that, and that, embed that in your brain, because those are the only three things you will ever guarantee are going to happen. Price goes up, price goes down, and it moves through time. On this chart, that's all that's happened. Why did it happen? When did it happen? How did it happen? Are all going to be different. Yeah, if you go to that chart now and I hit the page up button, same thing happened there, same thing happened there, same thing happened there, same thing happened there. Do any of those charts look the same? How could you possibly predict what's going to happen on the next page up? When I press the next button forwards to go forwards the next month, what's it going to look like? You don't know, I don't know, they don't know. So stop trying to find out. Just make sure you get in and out and use areas we know we can get to with a profit. Yeah. This is why everything's drawn on my chart. It's either going to go to resistance or it's going to go to support at some point in the next week. I know that, but I don't know which. So just let yourself go with the flow, go with the market. Because you know it's going to happen. Watch price reaction at the levels. Yes. Do you trade gold? No. Dashboard. Diamond, I've got a dashboard that does the support and resistance. Because what I want to do is if price gets there, look at my chart and then decide. Yeah. Yeah, put the EA on, wait for the market reversal alert to enter. Exactly. Franco, how difficult is it to install an EA? Difficult at all. Very easy. Literally, just drag it onto your chart. Very simple. Well explained. I followed and watched quite a lot of Trader Trade and never heard what you just said. There's a reason for that. What you shared is gold, very similar to other professionals who shared the same idea. The reason my YouTube channel's got less than 10,000 subscribers, Lens, is because I'm not selling you the Holy Grail. What people want to do in this industry is make a lot of money very, very quickly and buy a Lamborghini. Yeah? That is what you cannot do in this industry. People can. Yeah, don't get me wrong. I could take a 50 grand account today and double it in 2 weeks. But I will at some point blow that account. So yeah, I might be able to double it and buy a second-hand Ferrari. But I'm not going to be able to get that Ferrari repaired because in 3 or 4 weeks' time, I'll have lost it all. And that's what everybody's looking for. They're looking for something that's going to make them a fortune. And the guys that parade around showing you wealth are the guys that make a load of subscribers. Guys like me who sit here every day, twice a day for multiple hours and sit here and watch this thing go up and down and not move are the guys that are actually making money out of it. But we're not driving Ferraris. We're making a consistent 6-figure income, which is more than most people. I don't earn more than a brain surgeon. But then again, I haven't spent £100,000 and 7 years of my life training to become a brain surgeon. I decided to put my time into this instead. But everything can be scaled with the right amount of money, which is what Warren Buffett does. You know, say Warren Buffett makes 8 to 10% a year, but he makes 8 to 10% a year off $1 billion account. Therefore, he's making a fairly good income. But he's not taking high risks. He's tiny risks with big pots of cash because he, like everybody else, doesn't know what the S&P 500 is going to do. I'd be really interested to see what Warren Buffett's income was here because that's what he does. This is what he got. I wonder what he did there. It'd be interesting to see his investment firm's results over this period. Because handling a bare volatile market like this is very, very different to handling that, isn't it? Not quite sure where you find that information out, but one to go and find out information about. Right, I'm going to leave it there. I've waffled enough this morning. So 1.35 bank this morning so far. I don't think I'm going to bank much else today, really. Nothing is in any particular drawdown at the moment. Euro Swiss is the most extended thing I've got at the minute. I'm just around about a buy on that anyway. So nothing really going on. So this afternoon, we've got the consumer confidence figures at 3. That's really all we got today from a news perspective. The IFO business climate's gone, obviously. I don't even know what that was. Doesn't really tend to do a lot. So that's what we've got basically this afternoon. Not going to move the market much. So I anticipate today being one of those. And then tomorrow morning, we sort of kick off. So the US Open this afternoon should be fairly good because we've just started earnings season today, or earnings fortnight today. So we've got all these pre-markets to impact the Open. So we'll have a load of volume come in on these guys. So the pre-market breakouts today will probably be, hopefully, fairly good. And then obviously we've got all these aftermarkets which will affect tomorrow. So we've got tech, motor, which is Dow, and S&P. Let's just have a quick look at these. So we've got Dow Jones, I don't know what that trades on. So Dow this afternoon. So Verizon and 3M, the main Dow stocks this afternoon. So that's probably the best thing to trade this afternoon, the Dow. If you want to pick one instrument, that's probably it. We should get most of the movement happening off of that, hopefully. But I haven't even seen what the earnings are. But again, earnings doesn't matter, does it? Yeah, understanding if something's doing that, doesn't matter why, does it? It has happened or it will happen. So whether it's positive or negative earnings, we will have seen that movement pre-market. So what it does at the open is going to be different. So we'll trade that this afternoon. We'll see how we get on. We've had a fair old bit of volatility out of the Dow today. As you can see, look, same as the DAX. The Dow and the DAX, very, very similar at the moment in Globex. So you have got an opportunity to also trade the Dow at the Frankfurt Open at the moment, which is what I've done this morning. So, but we'll trade that this afternoon. But back tomorrow morning at 7:50, same time as usual. And then back this afternoon at 2:20 for the US session. Anything you need, let me know. I'll be in Telegram. Links going along the bottom constantly. And yeah, have a good day. And I will see you guys either tomorrow morning or this afternoon. Have a good one.